All right, so now we are going to look at calculating payroll taxes and withholdings. All right, so payroll tax is just a tax that is deducted from a person's paycheck. Okay, withholdings allowance is a amount that's deducted from each person's paycheck. Okay, so it could be specific things, it could be required, it could also just be something that the employee elects to have taken out. Right? Payroll deduction is an amount that's withheld from the employee's total earnings. All right, so here's an example of an employee's withholdings allowance certificate. So this is showing the person, it's got their social security number, it tells whether or not they are married or single. It's going to tell how many allowances they have, so how many withholdings they are wanting to have. Okay, and then they can elect whether to deduct any additional amounts. Okay, so here is a schedule for withholdings for a single person. So if a person makes, let's look at this. So if a person is making $1,100 in a pay period, but less than $1,020 in that same pay period, depending on how many withholdings they had selected, the amount that's going to be deducted is going to be a little bit different. If they selected 0 withholdings, it's going to hold the most amount, so it would withhold $120. If they selected just 1 withholding, it would withhold less. So depending on how many withholdings you select, it's going to depend how much you're actually going to have withheld. So the bigger of number of withholdings allowances, the less money that's actually going to be withheld. So something kind of important if you do end up getting a job is that if you're wanting to have the biggest tax return, always pick 0. So if you want to have the biggest possible tax return that you can, you want to pick 0, because that's going to withhold the absolute most that they can from your paycheck. The more numbers of allowances you pick, the less they're actually going to withhold. A little bit bigger chance that you might end up having to pay back at the end of the year when you do that tax return. So just a fun tip. Okay, so here is an example of a married person's withholdings. So depending on how many withholdings allowances they chose to have, it's going to depend on how much they're actually going to end up withholding from their paycheck. All right, so now we're going to look at Social Security and Medicare taxes. So Social Security taxes is a federal tax that helps to pay for old age, survivors, disability insurance. So when you get a job and you're paying in, you're going to pay withholdings taxes, and those are going to go to paying for those older individuals who can't work anymore, any survivors, or anybody on disability. Medicare tax is going to be withheld from your paycheck as well, and that is to pay for hospital insurance for those who cannot afford insurance on their own. Right, accumulated earnings is the total gross earnings that you have year to date. So if this is just the beginning of the year, it's going to be a lot less accumulated earnings than you would have in December. Tax base is a minimum amount of earnings which a tax is calculated on. So there's a certain threshold where if you don't make that in a year, you're not going to have any taxes actually withheld from your check. All right, voluntary deductions. So these are deductions that you are choosing to have withheld from your paycheck. So a qualified retirement plan is a voluntary deduction. It's just a retirement savings plan that is approved by the IRS, and you can have money deducted from your check and put directly into that qualified retirement plan. Similarly is a 401k. It is a qualified retirement plan that is sponsored by a specific employer. Okay, then there is the IRA, which is an individual retirement account, and it is withholding money from your pay, and it's offering a deferred income tax benefit. So you're not paying taxes when you're putting that into the retirement account. Right? Then there is the Roth IRA, which just allows you to put money into that retirement account, and it is tax-free when you withdraw from that account. Okay, so then to calculate our actual tax deductions, we take our total earnings and multiply it by the Social Security tax rate, which is 6.2%. So we would have to multiply our $1466.25 by 0.062 to calculate our Social Security tax deduction. Right? Same thing with our Medicare tax rate. We would multiply the $1466.25 by 0.0145 to calculate our total Medicare tax deduction. Okay, so now we are doing the work together on page 357. We need to calculate the federal income tax withholding, Social Security tax withholding, and Medicare withholding. Right, so first we're going to calculate our federal income tax. So to do that, we need to use the table. And in your book, you can see a copy of the single table and the married table. They are on page 353 and 354. Okay, so our first employee, they are married and they have 2 withholdings. So we're going to use the married tax withholding. That is page 354. They had a total earnings of $1,360. So I'm going to find the $1,360 wages on that table. I'm going to go over to the 2 withholdings, and I'm going to find that my total withholdings for federal is going to be $52. Okay, my second employee, they are single, and they have 1 withholding. So that's going to be our single table. That's on 353. They had total earnings of $980, so I find $980 on that table. They had 1 allowance, so I go over to the 1, and they have a total withholdings of $79. Okay, my next employee is married with 3 allowances. So I go to my married table. They have a total earnings of $1,510. So I find $1,510 in my table. And my $1,510 is going to fall between the $1,500 and the $1,520. I'm going to go over to their allowances. They have 3 allowances. So I go over to their allowances. And I find the total withholdings for $50. Okay. My last federal income tax withholding is in the single table for 2 allowances. Their total earnings is $1,125. So it's going to be between $1,125 and $1,140. They had 2 allowances, so I find my 2 allowances, and I see that it's $77 withholdings. Okay. So now, part 2, we need to calculate the Social Security tax and the Medicare tax. They are telling me that the Social Security tax is 6.2%. and the Medicare tax is 1.45%. So I take the total earnings, so the $1,360, I multiply that by the 6.2%, which I convert that to decimal as 0.062, and that's going to give me my total Social Security withholdings, which will be $84.32. Okay, to calculate the Medicare withholdings, I take that $1,360 and I multiply that by the Medicare tax rate, which is 1.45%, or I multiply it by 0.0145. And that's going to give me my Medicare withholdings, which is going to be $1,972. Okay, so now to find the rest of this Social Security and Medicare tax withholdings, I'm going to do the same calculation, but with the other employees' total earnings. So to find my next employee's Social Security tax withholdings, I take that $980, I multiply it by the 6.2%. That is going to give me $60.76. To find my Medicare withholdings, I multiply that $980 by the 1.45%, which will give me $14.21. Okay. To find the Terry Lambert's Social Security tax withholdings, I take that $15.10, I multiply it by the 6.2%, which will give me $93.62. Right, the Medicare tax withholdings, I take that $15.10, I multiply it by the 1.45%, and that will give me $21.90. Right, our final employee, their total earnings was $11.25. I take that times the 6.2%, that will give me $69.75. Right, the Medicare tax withholdings will end up being $16.31. Okay. So to find my federal income tax withholdings, we had to look back at those tax rate tables for the single and the married. And then to find my Social Security tax withholdings, I take the total earnings, I multiply it by the 6.2%, or as a decimal, that is 0.062. To find my Medicare tax withholdings, I take the total earnings and I multiply it by the 1.45%, or as a decimal, the 0.0145.